Hello, everyone. This is Sergio Marrero, and we're here at another episode of RBL1 Live. We have the one of the partners from Hyde Park Venture Partners, Allison Lechnir. Thanks for joining us tonight.
I'm glad to be here.
Yeah. So for those that don't know about Allison, we've been in the ecosystem for some time. We've known each other. She is fantastic. So I'm excited for you all to get to meet her. But a little bit about her educational and professional background: graduate of Northwestern University, and then went to University of Chicago, got her master's in public policy and business. So we have a lot of similarities. She made a stint in consulting before now ended up being a partner at Hyde Park Venture Partners. So before we dive in, if you could share with the audience a little bit about Hyde Park Venture Partners.
Happy to. So Hyde Park Venture Partners, we are a pre-seed to, I would say, early Series A venture capital fund based in Chicago. Whole team is in Chicago, which is exciting, and exclusively invest in companies that are building in mid-continent. So that includes the Midwest, the traditional Midwest, as well as the Toronto and Atlanta ecosystems. And so that's where we focus, and it's anything software, marketplaces, tech-enabled services, et cetera. But other than that, we're industry and business model agnostic, which is a lot of fun. Fund has been around for about a decade now, and we're currently investing out of our third fund, which is $100 million fund. And so that's who we are.
Amazing. Amazing. And what can you share a little bit more about what types of founders you look for and what size checks?
Yeah, absolutely. So checks is easier than what types of founders. So we'll cut checks anywhere from 500,000 to 3.5-4 million in rounds of, let's say, 1 to 10 million. So that typically looks like a company that could be anywhere from pre-launch, pre-product, pre-revenue, up through $1 million-ish, let's say, in ARR. Things change depending on the overall, venture funding ecosystem where that lands us. So we'll do that. As far as like what kinds of founders, like there's no one answer to that question, right? I like founders who excite me. And I can get excited by a lot of different kinds of founders. If you look at kind of two of the investments that I've led, they're sort of polar opposite as far as founder profiles is concerned. One is like extremely deep industry expertise, has been working in the industry prior exit for 20 years, been working in the industry for 20 years, has a prior exit in the space, like very experienced, but not like venture experienced in a bunch of different ways. And he's fantastic. And then another founder that I work with, I think is maybe 24, started the company while he was in college or maybe just graduated. But super interesting idea, super like, phenomenal to work with, and built a lot of faith in what he and his team were building. And so any of the above.
Yeah, I love how you have more of a, you said, geographic focus. Any particular industries that you may dial down on?
I would say like generally, so we as a fund like don't have a thesis, right? So there's no like, don't talk, if I don't name your industry, like don't take that as a sign of not to talk to us, right? Like, so that's like most important. I think the things that get me excited, or that get us as a fund a little bit more excited, where we'll dial up industry wise, might be e-commerce infrastructure. We've done a fair amount of investment in that space. Being in Chicago, a fair amount of work in logistics, where there's a lot of logistics, as well as fintech. But again, we've looked at everything. My background is in health insurance. My early career background is in health insurance. I've also spent time in civic and gov tech. So I'm always happy to look at kind of anything in those areas. Again, investments in workforce development, in education, in fitness, kind of across the board, which is great.
Amazing. And on the geographic front,
Mhm.
Midwest, you mentioned Midwest, Atlanta, and Toronto.
Yes.
Can you talk a little bit about why that's the focus? Let you take it away.
Absolutely. Yeah. And that is like the core, I should say, like, that's the core thesis of the fund. Like, and that's the core, like, if not one of, if you are not like based in one of those geographies, like there's no way it's going to be a fit for us. And that's because, when the fund was founded, and it's still true, Chicago and the Midwest, and I'll get to Toronto and Atlanta and our expansion there in a moment, we're like really underfunded, particularly at the seed stage, right? Like if you were a great founder out of Chicago, you were kind of consistently told, like, if you want to raise money, you have to go to the coast. If you want to build a company, you have to go to the coast. If you're not in San Francisco, then what are you even doing? And like, we fundamentally believe that that's not true. And I think that thesis has kind of been proven out over and over again with our portfolio and the portfolio of, pure funds that we know very well. Which is this idea that like you can build a great tech company anywhere in the country. There's great talent. There's great customers. There's the kind of infrastructure that you need to build a company. But all that was missing was venture capital to be able to seed those companies. And so that's kind of our core thesis around the geographic focus. I would say, like, in the decade we've been operating, the situation's gotten a little bit better, but it's still, certainly not comparable to many of the ecosystems that are out there. And the advantage of that for us is that, frankly, we see interesting arbitrage opportunities, right? A great company that's building and gets to, let's say, be a late Series A, Series B, and certainly beyond that stage, is going to talk to all of the best investors across the United States, if not beyond that, because they'll certainly fly to Chicago. But a seed stage company, we have a unique advantage. If you're in Chicago, let alone if you're in Kansas City or Pittsburgh or Madison or wherever you are, like, you're more likely to talk to us first before you're, talking to a California-based fund, let's say, that might be willing to and excited about a higher price and a higher valuation. And so we see an arbitrage opportunity there. And so we started in the Midwest, Chicago and the rest of the Midwest, and have added Toronto and Atlanta, primarily because those ecosystems had the exact same characteristics that the Chicago ecosystem does, which is a fantastic pool of talent, a fantastic pool of customers, great ideas, diverse founding teams, just not as much capital exposure and not as many folks paying as close attention to the ecosystem. And so that's our whole thesis, and it's been great so far.
And when you decided Toronto and Atlanta should be in the fold, what were the thoughts there?
Yeah. So again, it's the same advantages that we have. We were able to build, are able to build those in those geographies. At the same time, they're frankly like a short direct flight away from Chicago. It is not difficult to take a day trip from Chicago to Atlanta or Chicago to Toronto, which was a key piece of it. And again, like, just really like a place where certainly at the time that we entered the market, people are paying a little bit more attention to Chicago now, Toronto, and Atlanta now, which is great. Honestly, it's a rising tide lifts all boats, and we want to see these ecosystems continue to grow and develop, and don't want to keep them for ourselves. But it's really fun to be able to keep them for ourselves because, like, nobody else was paying attention, and they should have been, and we were able to take advantage of that.
That's awesome.
Yeah.
I want to talk a little bit about your background. You're we've nerded out a little bit on GovTech, and talking about how creating startups can also create an impact. You can make money and do well, do good, as they say. But can you share a little bit on your career path and how you made it into venture capital?
Oh boy. Yeah, I'm happy to. there are lots of people, first of all, everybody will say like career paths are not a straight line, and mine certainly wasn't. And then there are lots of people, I'm sure, listening to this who are like, I must get into venture capital, like where my goal is, I want a job at a venture capital firm. And like, I certainly admire that. And, but I like, am not going to lie to you and tell you that I was ever that person at any stage in my career before joining the fund. So I'm, happy to share that. So I, started my career, graduated with an engineering degree out of undergrad, and realized I didn't want to work as an engineer. And, when you don't want to work as an engineer, they hire you at a consulting firm. And so I went into consulting because it was all my friends were doing. So went into consulting, spent a few years, got into the healthcare space, had a lot of joy in working on projects related to Medicaid first, and then the Affordable Care Act, and particularly in helping to fix healthcare.gov after it went live, which is a really fun, really rewarding experience. But you mentioned GovTech. That experience made me a little bit disillusioned with how the government uses technology and thinks about technology and how it can genuinely improve folks' lives. So I went back to school with that kind of thesis in mind around kind of, this is the set of problem that I want to solve. And so I went back, ended up getting both a master's in public policy and an MBA. And while I was in school, again, with this like gov tech thesis in my head of like, this is what I want to work on, I realized that if I wanted to do that, I sort of had three different options. One was to go back into big consulting, which was not appealing to me for a bunch of different reasons. The second was to go directly into government, which was interesting, but needed to take a particularly like certain type of path to make it exciting. And then the third, which caught my attention and like wasn't something I was thinking about before school, was to look at startups and to look at startups that were kind of solving problems in the space. And so that's the path I ended up taking. Through a roundabout way, co-founded my own startup that was using technology built out of the University of Chicago to identify police officers that were at risk of misconduct or other issues. So worked on that for about a year, brought it through an accelerator, realized, you've heard nothing in my background to date that is related to police. And I realized I was kind of the wrong founder for that kind of company. The tech has since been like picked up by somebody else who's doing an excellent job scaling a business that's using it, that has a much better founder market fit than I certainly ever did, which is great. So I walked away from that after a year, but realized like I still love startups. Took a job at a Series A ish company based here in Chicago that was also working in the GovTech, civic tech space. Spent a couple of years there running business operations. And eventually it was time to get a new job. And the opportunity at Hyde Park came up. And it was never a sense of, I must be in venture. It was a sense of, I've kind of followed my heart throughout each of my steps of my career of, this is kind of what felt right. And I was lucky enough and to be offered the opportunity to join the fund, and it felt right. And 3 years later, it still does. And so that's sort of my path. And I really love it, love investing and love being on the investing side of the fence. Certainly occasionally jealous of my operator friends and my founder friends and the journey they get to be on. But yeah, that's my story, I guess.
Awesome. And you said you're jealous of the founders. If you were to found a startup now, what area would you go? Where would you start looking?
Oh man, I don't know. I think it's funny. I got that question once before as well, and like the answer that I gave then, the answer that I'll give now is like, if I knew what the right like billion or multi-billion-dollar startup is that I could find, like that I was the right person to found in the right market, that I knew I could scale, I would quit my job now and found that startup, right? Like, and so I think like I don't know. It could be in healthcare. It could be in GovTech. It could be in something entirely different, like that I've never done. I think though, to that point, right? Like the best startups, from my perspective, are founded by people who have thought really, 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 really deeply about the problem that they want to solve, right? And like all of the intricacies of that problem. And in my role now, I'm a generalist. I get to talk to founders doing literally anything that you could possibly imagine, which is really cool. But what it means is I don't spend my time thinking really, really, really deeply anymore about like one particular type of problem. And so I don't know if that means that like I would be a great founder of any one type of company right now, unless it was something like where venture was the customer, but those are not particularly exciting startups from my perspective.
Excellent. In your, as you're looking at different areas, I know right now, what is it? Web3 is all the rage.
Yeah.
So would love your thoughts on the excitement of Web3. What does it mean? Are you excited to buy it?
Yeah. Good question. So I think, it's funny. I would say I am not a Web3 diehard. I would say I am Web3 curious. I think like from my perspective, some of the Web3 applications so far, I've been a little bit underwhelmed by. Like I'm not a true believer in, NFTs as the future, is what I would say. But I think that as we develop more like actual applications of distributed frameworks and distributed technology, I think there's a lot of exciting kind of work that's being built in Web3. And so I am like most excited. Like there's a startup that I've spoken to. That's probably the one that I'm most excited about. That's like definitely in the Web3 space. That's like a distributed data storage type technology, right? Because I want to know. I like start every call with every founder that I meet with, Web3, not Web3, whatever, about like what is the problem that you are solving. And I think one of the challenges I see in Web3, not to be like negative about it, because I do think there's a lot of opportunities there, is that there isn't like a clear like problem that it's solving for a lot of people or companies. And as you get to Web3 solving like clear actual problems for people, that's when I'm going to get more and more excited about the opportunities in it.
Yeah, when I look at get into a few conversations with folks on the spectrum of innovation, I think a lot of people are excited by the use of NFTs for, art and digital assets, but I am bullish on the use of it for operational efficiency. Like these you can efficiently use this to track ownership, have fractionalized ownership, make it more efficient to have payment systems, operate a community in a decentralized way, in ways that like you couldn't before. So that to me is those elements. But like you said, those are all different use cases, and all being built on these it's like on protocols, right? It's like all being built on different protocols. So I'm curious to see when it shakes out which protocols, which killer use cases are gonna be in front.
That's another great point. I think it's funny. The distributed ownership and like the fractional ownership pieces, I think, make a lot of sense. I worry though with a lot of the Web3 applications right now, that it's like people who have made a lot of money. This is like going to sound super negative. I apologize. But people who have made a lot of money in crypto are looking for ways to kind of continue to leverage that crypto in like slightly more creative ways. And so I don't know how much NFTs are bringing more people into either the Web3 crypto space or into the art marketplace. I'm not really sure. And so that's one of my kind of questions around it, is like, are they genuinely opening up collectible things for people, who otherwise haven't been open to that, or is it some of the same?
Yep. And we'll see. We'll see how
We'll
it
see.
shakes.
We will absolutely see.
So love it. Double clicking on GovTech.
Yeah.
And you mentioned the use cases, right? What are your thoughts? This is totally side. Not sure if you can speak to it, but like the steps for the government to innovate, like some programs like the Presidential Innovation Fellows, the help, some of the initiatives that came through with the healthcare initiatives that you were a part of. What do you think is it has shown the most promise in the space?
Yeah, I love the Government Innovation Fellows program, like the Presidential Innovations Program. I think that's fantastic. But I think that, it's funny, like that's all at the federal level. And most of government is not at the federal level. Most of government's at like your local government level. And so that's the stuff that gets me the most excited in GovTech, is like in day-to-day interaction with your government, your local government, whether it's related to schools or criminal justice or street sweeping or whatever it is that like makes your life, where the government is impacting your life on a daily basis and like in a regular way. And so those are the types of quote unquote GovTech companies that I'm most excited about. I think that there's a lot in there's been a lot of movement in government benefits and helping people get Medicaid or WIC or things of that sort, that I think is really, really important. But the other thing about government technology is, like, from a thesis perspective, is unfortunately, the government is not going to innovate just for innovation's sake. And they're not actually going to innovate, this is terrible, but like, because they necessarily want to make your life easier, better, more functional. They're going to innovate because there's like a very key external pressure to do so. And that external pressure can either come from the federal government downward, saying, here, we're going to put a bunch of money towards X. And therefore, then, that enables state and local governments to fix X. And there's going to be a technology opportunity related to that. Or there's like public pressure on something, like there's electoral pressure on something where there's a problem that needs to be solved that's impacting a community. And therefore, they're open to kind of looking at technology solutions to do that. And so that's a little bit about like, what do I see as like most exciting? So like that's sort of defined of like, what do I see as most exciting in GovTech? It kind of is no different than what I see as most exciting in any other industry, which is like, are you solving a problem that people or businesses or governments have that is like real and tangible and deep, and like you're feeling a real need here? And then what is the driving force where now is the right time to solve that problem?
Excellent. I totally agree. And yeah, GovTech's slow to, like you said, slow to change, but there's some impetus to move that forward. That's the pressure. And even with COVID, lots of innovation and how they rapidly supported deployment and logistics of vaccines at a high level. But I will pause there. I appreciate your time. I don't know if you want to share with the audience what's next for Allison and Hyde Park Venture Partners.
What's next? We're going to continue to invest, continue to cut checks in the Midwest. So if you are a founder, Pittsburgh to Omaha, Minneapolis to St. Louis, or Toronto or Atlanta areas, would certainly love to chat with you. But yeah, that's what's next for us. And I'm excited to kind of continue to lead the way in those geographies.
Excellent. Well, for those that are watching, thanks for tuning in. If you want to connect with Hyde Park Venture Partners, you can click the link in the live stream notes. And thank you very much, everyone. Allison Lechnir of Hyde Park Venture Partners. So thanks again.
Thanks for having me.